We are going to get started with our next panel discussion here. Thanks, everyone. This panel is called Modern Finance, Modern Oversight, From Marble Halls to Fintech Calls. It features two of the best fintech experts in Washington. The first needs no introduction. He's Chairman Bryan Steil of the Fintech Subcommittee, also digital assets and AI, two additional topics. But Congressman Steil has been an incredible champion for fintech here in DC, particularly looking to our EWA friends in the room, our fintech lending friends in the room, our bank fintech partners in the room. Congressman Steil, Chairman Steil, has been an incredible champion for our issues on the Hill. We're very excited for today's conversation. And moderating the panel is Jenner & Block's Jeremy Creelan. Jeremy is one of our great friends of the American FinTech Council, and we're going to look forward to a great conversation between them today. Thanks, everyone.
Very much.
Thank you so much. Congressman, it's a real delight to have you here. It's a privilege. And for those of you in the room who don't know just how privileged we are, Congressman Steil has been a leader and really the primary architect of fintech and digital asset policy in Congress, and continues to be so. He chairs the House Financial Services Subcommittee on Digital Assets, Financial Technology, and Artificial Intelligence. And previously, he served as a regent of the University of Wisconsin system and worked in Wisconsin's manufacturing sector for over a decade before entering Congress, experience that obviously informs your work on these issues. So let's, if I could, I'll begin with a topic that is near and dear to many in the AFC community, which is earned wage access. So you have been a leader in that area, being the author of the Earned Wage Access Consumer Protection Act and an advocate for sensible federal regulation in this area. So the folks in this room have been dealing with a patchwork of state laws, for quite a while, and are eager to get, some regulatory certainty and some federal action. What are can you give us a sense of what the prospects are for federal action in that area?
I'm actually reasonably bullish on it. I think it's because it pulls people together, that people should have access to the wages that they earned. If we go back 150 years ago and you worked at a factory on a farm, at the end of the day, you expected to receive pay from the owner of that small business. It was only as large ERP systems came in and payroll systems got set up and thousands of employees were there, where we started to separate the work that an individual does with the pay that they're receiving. And what EWA really does, in my opinion, why I'm so excited about it, is it really reconnects work with reward. And that is a really, really key component. So if you step out, if you think about this, if you have a single mom who's working her tail off, and say she works, I was going to say Target, but they have EWA embedded in. So we'll use another company, another big box store that has not been so forward thinking. And their boss comes up to them at the end of the day, holiday season's coming up, and they say, would you like to work an overtime shift? That pay might not arrive until after Christmas for somebody that wants the money to use it. That's different, of course, if you're a bartender or a server. Often, I used to work at Applebee's, an esteemed establishment. Hopefully your lunch was just as good. But at the end of the day, if you worked a Friday night and you worked the late shift, you got to walk home with the cash in your pocket. And so I think it cuts across the ideological spectrum, Republican, Democrat, conservative, or liberal, that people should be able to receive the pay that they're earning. Then you get into the technical aspect. We have legislation in Congress that I'm hopeful that we can move through. We've had some Democrats that have come on board with this. We've seen states generally blue in nature that have navigated this through at the state level. And then we also have a potential AO from the CFPB and the administration, which is also in the works. And so I'm bullish that we can get this done. I think we have to get it done. But in a town that is really difficult to get anything done, where you need to get 60 votes in the Senate and Democrats and Republicans coming together, I'm of the broader view, because the underlying principles of this are so nonpartisan in nature, that we have a real opportunity to ultimately get this across the line.
Yeah, we heard from Congressman Torres earlier today. It was equally bullish and enthusiastic about it. So we're Godspeed.
Yeah, Rich is a good partner in that. I mean, he really he leans in on the tech space in a nonpartisan way. He's been a good partner not only in this but also as it relates to the broader digital asset space as well.
Yeah, it's really refreshing, I think, to see bipartisanship in this day and age, working together.
Usually we cancel out each other's votes, but on this issue, we completely see eye to eye.
So let me turn to bank fintech partnerships, and that's an area where, again, near and dear to many folks in this room. And it's an interesting time, I think, because there's sort of cross currents. I would say there's sort of obviously much more federal regulatory support for bank fintech partnerships, or at least an absence of hostility, that we've had in the past. And I think also everyone involved in these partnerships understands better how to do them well, understands the nuances, understands sort of the third-party risk management issues, how to really avoid some of the obvious pitfalls. But at the same time, we still have the same requirements in terms of supervision and worrying about the same old issues that have continued for a while, and we have some states that are still very hostile to it. What is your sense now of with our bank fintech partnerships? How are we going to what are we going to see in the next few years?
I think you're seeing more and more technology coming into the banking sector, and it's the fintechs that in particularly help our community and smaller banks, right? And so if you're JP Morgan, Bank of America, great institutions, and if you're Jamie Dimon and sitting in the boardroom and you want to invest $10 million in a project, you could probably invest $10 million with the stroke of a pen, and by noon tomorrow, they're off and running and a team is going. Community banks are under a lot of different pressures, but the same consumers, and absolutely essential in smaller communities in Wisconsin, my home state, or around the country. And so I think what the fintech community does is really gives a huge opportunity and advantage to some of our community banks to be able to provide the technology that consumers are demanding that the largest banks are able to do, either in-house or with a fintech partner as well. And some of this, I think, is what we're watching is this historical shift getting to a spot where everybody's bought in. I mean, I always go back, there was a 1978 New York Times article that said, cash robots will take all teller jobs. Actually, it's a worthwhile read. And they're explaining to people what we now know as ATMs, which are now ironically going away because you can do it all on your phone. But they're explaining to people how this is going to transform, and this is going to be terrible for banks. It's going to be the end of tellers. And of course, if you look back with perspective, there's actually more tellers at banks, but they're doing higher valued and higher skilled work because the job of literally counting cash is either now disappearing because you can just bing it on your phone, or B, done by a cash robot called an ATM. And so when we think about a lot of these fintech spaces, I think out of the gates, the human mind is really good at identifying risk. And I think a lot of people said, boy, maybe that's not for my community bank, or going to hold back. Consumers were demanding it. Consumers are much more comfortable. And you don't meet almost anybody that can't navigate their financial transactions on effectively a 3x5 device. And because of that, it is essential that we're partnering the fintech community, in particular the community banks, with the banking writ large, to really create efficiencies in the marketplace. And at the end of the day, if you're a free market conservative like I am, as those efficiencies are created, the ultimate beneficiary to that is the consumer.
And we're seeing a lot of M&A in community banking too, consolidation of various kinds, and the technology that whether you're an acquirer or an acquired often depends on how much technology you have. So that's really becoming a driver of the market. Is that what you're seeing, or?
Yeah, but I'd probably look at the regulatory landscape, that the burden of regulation that's being placed, in particular, I think we're beginning this process of reducing regulation and right-sizing it to risk. But I think we saw this massive push in the previous administration to be really heavy-handed on some of the regulatory approaches. And I go home and I'll talk to some of our community bankers and say, out of the last 10 people you hired, what were their positions? Way too often, it's compliance and not somebody that's working to grow the business. And if that's the case in any business, now leave the financial services, and we went out and asked any business in your home community and said, out of the last 10 people you hired, even if it was your business, it's the fintech community, right? If I went up and chatted with an EWA team, right? And they said, well, 10 out of 10 of our last people were all compliance. That's not a real good sign for your business. And I think that has been a huge challenge in community banking writ large, although technology and other factors are probably also a significant aspect.
I would agree with you, except with respect to hiring outside counsel, which, it's always a
plug
good
for
thing.
Jenner and Block has been made.
It's always a good thing for your business. Let me ask you a little bit about something that is very much near and dear to your heart, which is crypto and the work that you've done, obviously, both on the Genius Act and also on the Clarity Act. Can you give us a sense, for those of us who, I mean, the AFC does a lot of crypto work. It's increasingly so the members are involved in one way or another in crypto. Can you give us a sense of not only the prospects for passage of the Clarity Act, but also what what's the vision there and what will it do if it's passed?
Great question. Genius is through stablecoin legislation. We're working on Clarity, which is market structure legislation. In this room, we probably have a wide array of background kind of in the broader crypto space. I'm bullish. I'm of the belief that we are truly entering a Web3 era. And in that, the underlying plumbing of distributed ledger technology in crypto underlying that is going to be an essential part of the plumbing. And so if you've bought into that thesis, as I have, then you got to get rules of the road in place to move us forward. First, let's jump over and do stablecoin, which is just US dollar-backed stablecoin, which is like a US dollar-backed cryptocurrency in a sorts. All of that innovation and development was occurring offshore outside the United States, or the bulk of it, the vast majority. Consumer protection at the forefront and outcompeting other countries is essential. And so to do that, we put together the Genius Act. I had stablecoin, Genius, Haggerty. Effectively, they're merged together, and the ultimate bill comes across the line. And it sets up a framework in the United States where you can be regulated to show that you actually have the assets that you have that's good for consumer, that's good for consumer protection, but also a regulatory framework that makes it clear if you're operating and investing in this space, you are in a safe, legal location. And in so doing, I think what we're going to see is significant innovation and development in the United States. That's one very important piece of the puzzle, and super excited when that was signed into law by the president. The next major piece, and I think possibly more transformative, is the Clarity Act, market structure legislation, which oversimplified pretty much says inside the area of crypto, who is the regulator and what is their authority? What is the role of the Securities and Exchange Commission? What's the role of the CFTC? How should they intersect, and how do we make some of these key issues clear and then make definitions such that it's operational? Again, under the previous administration, Chairman Gensler at the SEC, in my view, was incredibly hostile to the broader crypto space. And what we had was enforcement actions driving policy. When you have enforcement actions driving policy, it's really difficult to get investment in the space, but it's also a really unthoughtful way to do policy. In comes Chairman Paul Atkins, in comes the Trump administration, in comes hopefully Clarity. And what we have is an opportunity to do rulemaking through a rulemaking process, let your elected leaders come forward and innovate and develop in this space. I think what we'll see is similar to Genius, two key things. One, I think we'll see a dramatic improvement in consumer protections, which is important. And the good actors in the space, they want to get rid of the bad actors too. And so I think you'll see a great improvement for the American consumer. And then really importantly, it positions the United States to outcompete the rest of the globe in this space. The United States has been a massive beneficiary of having the greatest capital markets in the world, and now unquestionably so is the gap between the United States and our peer countries, Western Europe, Japan, Korea, Australia, et cetera, continues to grow in that space. We are maybe tied at best in the digital asset space, and I think what we will see is as Clarity comes across the line, you're going to see significant capital deployed, both human capital in the United States as well as financial capital. And the transformation that we can see as we enter the Web3 era, I think is beyond what a lot of us can fully comprehend right now.
And what is your sense of which the Senate version, the Senate bill versus the House bill, which is going to drive the final product?
Well, the House passed the bill,
right?
And so as we got, which always is easier than them having drafts. But what I look at is the Senate has made really good strides. It's really positive. We're seeing draft. Just as I was coming in, if my Twitter feed was accurate, the Senate announced that Senate Banking and Senate Ag are going to be holding a markup later this year with hopeful floor time in Q1. I literally read it on Twitter, so I hope that's fully accurate. But
usually is.
Literally as we were driving in. But in a real sense, Clarity, as passed by the House, is a proven bill that works. And what the House did is gone through multiple iterations of this. The first hearing on digital assets in the House Financial Services Committee was back, I believe, in 2017. Last Congress, the House moved through FIT 21, an early version of the Clarity Act. We navigated through the Clarity Act, great leadership by French Hill, in particular, G.T. Thompson, Dusty Johnson, my friend, and myself. And what we ultimately got on the House floor was 78 Democrat votes in favor. That's over 2/3 of the United States House of Representatives voted in favor of the Clarity Act. That's monumental at a period of time where the House can barely get anything navigated through with more than 3 or 4 votes in favor. And so I'm bullish that what the Senate is going to do is take advantage of the work that the House did and begin their negotiations from that point. We've seen some introductions where the Senate has kind of moved off the 50-yard line and pulled the ball back to their respective 5-yard line on any given issue, and they're fighting their way and navigating through. And I think what we will continue to see, and in my encouragement both publicly and privately to my Senate colleagues, is use the House bill, the Clarity Act, as your starting point and negotiate off of that if you feel that there is a need or a benefit to doing so. But I am bullish off of these announcements. A lot of meetings with my colleagues in the Senate. I joke with French Hill that it's like Henry Kissinger. We're doing like shuttle diplomacy from one side of the Capitol to the other. But an opportunity to get this finished, solidified into law. Again, I think there's a huge win for consumers and a huge win for American innovation.
The House bill has the consumer protections that some of the Senate doesn't. Great. So I'm going to move. We're doing a kind of lightning round here, so forgive me from bouncing around, but we don't have a huge amount of time. So let me talk about 1033 and open banking. Also something that for these nerds in the audience are obsessed with. So the CFPB comment period has closed. It closed in October on their latest, the implementation rule. And as you know, J.P. Morgan reached agreement on fees, charging fees for the data. And it's sort of, the issue is pitted, fintechs against traditional banks. Where do you stand on 1033 and that issue? Should the CFPB rule prohibiting fees stand? What's your perspective on that?
Well, I think as the comment period closed, I think we'll see what the final rule looks like from the CFPB, assuming we get a final rule in the not too distant future. And I think what is almost most important is that we reach clarity and we reach final resolution on this, because I think we have an opportunity to unlock a lot of innovation and development. And so my push is let's move forward, let's get the rule in place, and let's make sure that the stakeholders are at the table. The pricing piece, I think, will be figured out by the market. I've never loved the heavy hand of government in those types of situations. But I do think we have a huge opportunity to define the rule as the legislation, I think, made reasonably clear. Let's get the rule out. Let's finalize the economics of this. And then let's unleash the potential that's available as a result of it.
It may be an area where certainty is more important than the economics, and to some degree. Last but not least, AI, because everyone has to talk about AI all the time. There are lots of different aspects of this. I want to ask you in particular about, we're obviously in a race with China to maintain and what is really now still an advantage, knock on wood. And enormous infrastructure build out and major regulatory questions about whether states are going to step into the breach, if the federal government doesn't act. What is your perspective on how we maintain that advantage and what, the role for the federal government?
It's a great question, and there's a lot of things at play at this, and we will be having a hearing on this either at the subcommittee or at the full committee level in the near future. AI is embedded in so many financial tools right now that it's absolutely essential. We also then, outside of the financial services space, we're in a massive AI race vis-a-vis China that we, the United States, have to win. How do you do that, and what are the biggest obstacles in the way? The United States is wildly benefited by having one common market. We often then have states' rights, which balkanizes that, and there's a constant tension between federalism and the Commerce Clause. And as we look at AI regulation right now, that tension is showing itself. But what I don't want is any one given state to become the standard for the country because that state moved forward. And as we have this balkanization of laws in the broader AI space, we're throttling in some ways innovation and development in the United States, which is often when there's a substantive and real role for the federal government. Then you need to say to yourself, what are those rules and regulations that the federal government should be looking at, exploring, and thinking about? I'm of the broader view that the best way to begin this process is to analyze what rules and regulations and laws are already on the books, and how do they apply to AI. So let's totally leave financial services, travel over with me to election law. I chair the administration committee as well, which oversees federal election law. There's actually a whole host of rules that apply to AI as it relates to political advertising, disclosure, et cetera. Duping someone's voice, which was done in the last election, which was AI-driven. You could easily now dupe someone's visual appearance, actually shockingly easily, if you go on to do it. There's rules of the road that are already in place. So do you need an entire new regulation specifically related to AI? Maybe not. Maybe we need to enforce the laws on the books. But there will be substantive and real nuance in this space. I was speaking to one of our community bankers in Wisconsin that's leveraging a product that's embedded with AI as it relates to loan decisions. For all the obvious reasons, we don't want discrimination at play when loans are being given out. You don't want to say because of your demographic A or demographic B, you do or do not get a loan. All the obvious reasons. And when those laws were originally set up, the assumption was, because you had to do it, was someone physically walked into your bank and the loan officer physically walked up and shook your hand, and then the process began. So if somebody had evil intent or was racist or whatever was wrong, you need a rules of the road. Absolutely, absolutely right. As we look at the broader AI space, what you want to make sure is do we need to finesse those rules to capture new challenges? So if we think about companies, you think about a Zillow of the world, right, or any other company that's out there doing analysis on homes. There's all sorts of racist housing policy that was embedded years ago in the United States. And if you let your AI with no plan, right, if you just went out and weren't thinking this through, you could easily let an AI tool run out and come up with all sorts of horrific decision-making based on information that should not be baked in. But you could also set it up where you could remove that. But there's going to be human involvement. And what I want to do is make sure that we're getting that innovation and development in the AI space, but providing the framework with which we're getting it right. And so instead of stepping out and saying coming out of the gates with an approach that a wholesale regulation of AI is needed, essential, and that Congress is going to get it right in a moment of time of massive innovation and development in the space, I think that's a challenging premise. I think a better premise might be that we start and continually work to analyze how AI is currently being utilized, in particular in this regard in the financial services space. And are any of the laws that are already on the books, do they need adjustment, finesse, to make sure that we're getting the policy right or not? And when we have our upcoming AI hearing in the Financial Services Committee or Subcommittee, those are the questions that I'm going to be asking. And we'll have great engagement from a lot of stakeholders in the broader financial services technology space about how they're utilizing it, what the benefits are to consumers, and how we get this right. Because although there is potential downside risk with AI, like there is with any new technology, there is massive upside. And as we think about the challenges we face with fraud, that AI could be a culprit of creating the fraud, man, when you talk to the risk compliance folks, the benefits of AI preventing fraud might even be greater. And so getting this right is going to be a huge component to ultimately outcompete China in this space.
It's interesting because AI is one of those areas where you probably need to work across industries, across areas. I mean, it implicates energy, it implicates telecom, the whole range of areas. So it's at a time when it's hard to get anything done. It's a challenge, but your caution in not doing it all at once makes a lot of sense. So I think that wraps us up. Is there anything you'd like to tell the AFC members based on your work, just in terms of what you're seeing in the future before we go? Yeah,
predicting the future's hard.
Yes.
Right? I mean, I always love, if you go back and you ever watch Back to the Future 2, and they leave 1986 and they arrive in 2015, which is sad that was 10 years ago, and they arrive, and there are flying cars, but there are people taking phone calls in phone booths, right? And it's because you can think about incremental change. If you've ever been stuck in traffic, right? You could be a 5-year-old, and you're thinking, Mom, why can't the car fly, right? But you never thought to yourself, aha, this small phone in my pocket will connect me without a wire running all the way through to grandma's house. You can't think about that. The technology that a lot of people are working on in this room is that transformational technology. And so making sure that policymakers are getting it right so that you can continue to innovate and develop is absolutely essential. And the platform that AFC provides as a mechanism of providing feedback and information to policymakers is really important. And so I'd say continue that overall conversation so we get it right with my ultimate belief that if we do, the real beneficiaries are the consumers of a lot of these financial technology products.
Well said. I want to just say on behalf of the membership and the council, we really appreciate your leadership, your thoughtful bipartisanship, and your thoughtfulness in this area, because it's rare and it's incredibly valuable. So really, thank you very much, and thanks for being here.
Thank you all.